Hello everyone, welcome to this discussion on standard deduction. So let's begin by looking at our federal income tax formula. Our first step is to think about our income broadly defined. From there, we think about are there any exclusions? And if we can exclude certain sources of income, then we just exclude them to come to our gross income. Once we are at our gross income, from there we can deduct certain expenses, such as if we are contributing to an individual retirement account. So once we have taken our above the line deductions, we arrive at adjusted gross income, which is an extremely important concept in our federal income tax calculation. Now, from our AGI, we can further subtract certain other expenses, which are called below the line deductions. And this is where our standard deduction becomes relevant. We have two options. We can either take the standard deduction, or we can itemize certain expenses, add them up, and compare their total amount against our standard deduction. And if standard deduction is greater, we take the standard deduction. On the contrary, if the total of the itemized deductions is greater, then we take the itemized deductions rather than taking standard deductions. So the bottom line here is that whichever is greater, standard or itemized deductions, we just go with the greater one. Now, one nice thing about standard deduction is that during your CFP exam, you will be provided this table. So you don't have to memorize any of these numbers. Here I am looking at the 2026 standard deductions, but these numbers can change over time. And that's another reason why you should not memorize this table, because this will be provided to you during your CFP exam. Now, what we need to learn here is how to work with this table. And we'll learn to use this table by looking at some examples. Let's look at our first scenario. We are thinking about a person age 45. The question says that person is single, and maybe the question does not give us any information on that person's blindness. And if there is no information, we are just going to assume that they are not blind. So now let's figure out where in the table I should look at. For single filers, the regular standard deduction amount is $16,100. And that's the only place where I need to look at for this person, because they are not 65 and they are not blind. If either of these conditions were true, then I would have to look at this bottom part of the table, but that's not the case. And that's why the standard deduction here is only the regular amount, or 16,100. Let's look at our second scenario. Now we are thinking about somebody who is age 45. That person is single, and the question says that that person is blind. So we look at two different places in the table. First, we have the regular standard deduction for single filers, which is 16,100. But when we look at the bottom of the table, it says that there is this additional $2,050 standard deduction for a single taxpayer age 65 or older or blind. So this person, although they are not 65 or older, they are blind, and that's why they get this one additional standard deduction of $2,050. So they have this regular standard deduction of 16,100, and they also have this additional standard deduction of $2,050. We add them up to get our total standard deduction for this person, which is $18,150. Now let's look at our scenario 3. Here we are thinking about a couple, and they are married filing jointly. So here we are assuming that both of them are 65. And then maybe the question does not give us any information on their blindness, so we are just going to assume that they are not blind. So we look at two different places in the table. First, for married filing jointly and also for qualifying widows, the regular standard deduction is $32,200. And then at the bottom, it says increased by $1,650 for each married taxpayer age 65 or older or blind. Now, they are not blind, but they are 65. And that's why each person here will get an additional 1,650 standard deduction. What that means is we have our regular standard deduction of 32,200, and then each person here is getting an additional 1,650. That's why we multiply that number by 2, and then we get our total standard deduction of 35,500. Now let's look at our fourth scenario. Now we are thinking about somebody age 65, and that person is single, and the question says that they are blind. So we look at, again, two different places. We have our regular standard deduction for single filers, that's 16,100, and this person is both 65 and blind. And that's why they have two additional standard deductions equal to $2,050. So once we multiply that 2050 by 2, we get 4,100. So that means this person's total standard deduction includes their regular standard deduction of 16,100 plus this 4,100. That brings us to this total standard deduction amount, which is 20,200. Now let's look at an example of how this concept of standard deduction might be tested on the CFP exam in a different format. Here it says Jordan, age 30, is single in 2026 and earns 80,000 in salary and 3,000 of municipal bond interest. Jordan also receives a $5,000 qualified scholarship used for tuition. Okay, so rather than reading the whole question, maybe I'll just read it step by step, and I'll just focus on the income tax formula. So here we have our income tax formula, not all of it. We are ending at taxable income because the question is asking about taxable income. So let's begin from the first step, which is income broadly defined. So here we have three sources of income. We have salary of 80,000, we have municipal bond interest of 3,000, and we have 5,000 qualified scholarship used for tuition. So these are the three sources of income, and we can just add them up. Now, we also think about, are there any exclusions? Again, in our first video, we learned about certain sources of income that the tax law allows us to exclude. And it appears that in this case, there are two sources of income that can be excluded. One is $3,000 of municipal bond interest, and also $5,000 of qualified scholarship used for tuition. Again, because these are used for tuition, and that's why this scholarship amount is excluded from our gross income. So what that essentially means is our gross income is just equal to our salary, and we don't have to worry about anything else. Now that we have our gross income, we need to think about our above the line deductions. So let's keep reading the question. It says that during the year, Jordan pays $2,000 in student loan interest and contributes $4,000 to a traditional IRA. So that part is relevant for calculating our above the line deductions. Essentially, we have two sources here. One is the student loan interest. The maximum you could go is 2,500. Here, Jordan is below that amount, so Jordan can take full 2,000 as above the line deduction. And then Jordan contributes 4,000 to a traditional IRA. Now, for IRA, it can be a little tricky, and I'll explain that in a future video. In this case, Jordan can take full $4,000 that he is contributing to a traditional IRA as an above the line deduction. We add the two sources, 2,000 plus 4,000. That gives us total above the line deduction equal to 6,000. So now we have gross income equal to 80,000 and then above the line deduction equal to 6,000. And once we do the math, we get our adjusted gross income of 74,000. Now, this is where the idea of standard deduction becomes relevant. Although the question is not directly asking about standard deduction, but if you know the formula, you know that you have to calculate the itemized deductions and then compare that number against standard deduction, and whichever is greater, you take that one. Now let's try to figure out what's the itemized deduction. Jordan has three types of expenses that can be itemized. So the first one is $8,000 of state and local taxes, and then we have 3,500 of mortgage interest, and we have $1,000 of charitable contributions. And again, these are all itemized deductions. So Jordan has two options. Jordan can either take the standard deduction amount. Again, we have seen that number before, that for single tax filers, for the tax year 2026, the standard deduction amount is 16,100, or they can itemize. Here for Jordan, it's 8,000 plus 3,500 plus 1,000, which in total is equal to 12,500. So whichever is greater, Jordan goes with that one. And of course, 16,100 is greater than 12,500. And that's why Jordan will go with the standard deduction amount, which is 16,100, rather than taking the itemized deductions. So now that Jordan takes the standard deduction, once we do the math, we get the taxable income is equal to 57,900. As you saw in this example, the concept of standard deduction might be tested in an indirect way. Rather than the question directly asking you about calculating standard deduction, it might ask you to calculate taxable income. And as part of that process, you'll have to figure out the standard deduction amount given the information that you have. That brings me to the end of this discussion, and I hope to see you in the next one.